good evening and welcome to another edition of Capital Market Live on Channels Television. I'm Laddie Williams. Tonight we unpack the big moves, the key risk and what to watch next in these markets. We know global equity markets closed the week on a negative and volatile note as investor sentiment was dominated by escalating geopolitical tensions in the Middle East and uncertainty surrounding the Strait of Hormuz. We can't go a week without talking about that strait now, but definitely looking at Friday's trade for the global markets, the sell-off in European stocks that continued on Friday after U.S. President Donald Trump extended the ongoing hiatus of attacks on Iran's energy infrastructure. The pan-European stock 600 provisionally ended the session 0.9% lower, with nearly all sectors in the red. We see the FTSE 100 closed just below the flat line, while France's CAC 40, that fell 0.9%, and Germany's DAX was about 1.3% lower. So, yeah, red was the picture right there in Europe on Friday. Flipping over to Asia-Pacific markets now, they traded mixed on Friday following a volatile session as the prospect of a peace deal in the Middle East remained murky amid contradictory messaging from U.S. and Iran. We don't know who to listen to at this point, and definitely investors reacted in a big way, with President Donald Trump extending his Friday deadline to attack Iran's energy infrastructure by 10 days to April 6th to allow more time for negotiations. The extension was at the request of the government of the Islamic Republic. That's according to President Trump. So definitely we see the impact right there on major markets in Asia. It was mostly mixed right there. All right, we'll flip over now to the U.S. See the Dow Jones Industrial Average tumbled on Friday, fell into correction territory, while Brent topped $110 after incidents in the Strait of Hormuz exacerbated investors' energy supply concerns. Definitely a lot to look out for right there. There's a big 2.15% drop on Friday, and Bitcoin wasn't left out. Bitcoin also dropped big, losing that $70,000 level, dropping to about $66,000. Ethereum also managed to hold, that 2,000 level. So risk off, and definitely we did see the impact on other markets there. If we look at oil prices on Friday, they closed at their highest level in more than 3 years. And definitely it's on the back of the pivot to negotiations with Iran. That's failed to ease target there. So for the week, quite interesting. We see Brent down 1.02%, WTI up 1.34%. We see Brent is pricing in geopolitics, while WTI is pricing, physical supply. So this week, easing headlines are hitting Brent, while persistent supply fears are keeping WTI, or kept WTI, in positive territory this week. And there we have it. We don't usually see it like this. Most of the time, they're up together, for the week. But now we have that divergence there for this week, with a big red candle down for Brent crude, if you track, most of the data there. So that's how the market played out for the oil market, and definitely also impacted is safe haven trade right there. All right, let's bring it back down to Nigeria. Now see the NASD OTC market closed in a green. That's for the week. Quite interesting seeing what's played out so far with global indexes. Even though the NGX didn't close in a green. Let's look at other parts of the market now for the NASD OTC market. So we see volume that was in the red compared to the previous week, 84.39% lower. But we see value up big, 333%. We also see deals there, 175, up 57.66%, compared to the previous week. Let's look at the biggest movers right there in the week for the NASD OTC market. We see the likes of Okitipupa Oil Palm PLC, 27.91% advance for the week. First Trust Mortgage Bank PLC, that added a big 10.05% advance, closing at 2 naira 8 kobo. Flip over now to the laggards for the week right there for the unlisted market. And we see Food Concept PLC topping there, 9.09% lower. Let's look at the top trades now for the week. Central Securities Clearing System PLC, Nigeria Mortgage Refinance Company PLC, and Friesland Campina Wamco Nigeria PLC top the trades right there on the unlisted market. Let's flip over now to the NGX Yeah, on the flip side, closing in the red, down 0.21%, but still managing to hold up the 200,000 level. This is a pivotal level there. Investors keeping their eye on this one. It's a milestone not seen for many years, and now we've seen that what is managing to hold on this week, even though it closed in the red. Let's look at trade volume and value for the week. That was lower, so maybe might be giving us direction there on how investors felt this week, right there on the NGX. But we see more deals compared to the previous week. 359,000. That was what was traded. Let's move over to other parts now. We see for the the indexes that we track there, insurance, that's for the sectors, 2.22%. Quite a big move there for insurance stocks. Oil and gas added 1.93%. Normally, we see banking and insurance, most of the time they're in the green at the same time, maybe for the week, but we're seeing a divergence there, just like we saw with WTI and Brent. Zikis Agro Allied Industry topped the trades this week. The biggest gainer, 60.72% advance, even though the NGX is down for the week. Premier Paint PLC, I saw this one featuring on the top gainers counter this week, 60.26%, and we see John Holt, 59.92%. Let's flip over to the laggards for the week there. We see the livestock feeds PLC, that topped the laggards, 11.73% drop there. So that was the color right there in the markets, and definitely investors reacting to what's playing out with geopolitics. Finally, at this point for the NGX, top trades, we see Wema Bank PLC, Access Holdings PLC topping the trades for this week. So it's financial services right there. All right, let's unpack the trading week now and major data release this week that could, impact your money. Joining me now for this conversation, we have Professor Uwaleke, Director, Institute of Capital Market Studies, Nasarawa State University, and President, Capital Market Academics of Nigeria. Great to have you on the show, sir. Thank you for spending your weekend with us.
Thank you so much, Ladi, for having me as your guest.
So definitely looking at the markets now for that's the NGX for the trading week, managed to stay above the 200,000 level. Year-to-date performance, that fell to 29.1% from 29.3%, while market capitalization reduced to 129 trillion. Trading activity declined as average volume and value fell 75 and 60%. That's for this, trading week. So is the NGX finally reacting, like other indexes globally that are down, due to the war in Iran? Because the NGX has kind of like outperformed most of those indexes.
No, I wouldn't draw that conclusion. I think what is playing out is more of domestic factors, driving the performance of the market, not necessarily the geopolitical tensions. Again, just as you mentioned, the market fell by just 0.12%, marginally. Year-to-date return is still strong at 29%, which is, when you compare that with the inflation rate of 15.06% as of February, we still have strong positive return. So generally, I would say investor sentiment is still strong. Particularly when you also look at the market breadth, over time. For most of the days, we've had, more gainers than losers. So I think overall the sentiment is strong. And to try to unpack why that is so, it's not far-fetched. It's more, in my view, related to the relative macroeconomic stability that we have in Nigeria today. And that's why I talked about domestic factors, driving. By that, I'm referring to the fact that inflation rate has moderated to the 15.06% I mentioned. The fact that we are having exchange rate, stability. And the fact that the companies themselves, many of the companies that are listed, show some strong fundamentals. particularly the banks. If you look at what is driving the performance of the banking stocks, it's more of fundamentals, particularly the big ones, the likes of GT, that is today trading at over 115 naira, the likes of Zenith Bank over 100 naira per share, the likes of Stanbic IBTC. So the fundamentals, in my view, are driving those performance, including the fact that the banking sector recapitalization exercise is also helping to fuel performance. Even though, if you look at the overall performance for the banking index, is I think as at Friday, it came in at around 25%, when the year-to-day return for the entire market is around 29. So it's still below the average market performance, but all the same, it is strong. But we've seen a lot of strong performance, particularly in the oil and gas. Well, that is one sector you can say that is reacting to global events. Yes, you've seen where oil price is now. So there's no doubt that the oil and gas sector is reacting to what is playing out. And that's why the year-to-day return for the oil and gas sector is as high as 63%. The industrial goods sector is also doing well, particularly the likes of Dangote Cement, Boa Cement, and a few others. They are doing well. The industrial goods sector today, in terms of year-to-day return, again is way ahead of the market. The market is doing 29, industrial goods is doing 55%. So that tells you the sectors that are actually driving the market. Some other sectors are really still below the water. Are trying to come up. A good example is the insurance sector, the index you mentioned. Insurance index year-to-day return is still below 10%. And if quite a few others. So in a nutshell, Ladi, I would say that the resilience of the Nigerian economy is what is helping to fuel animal spirits, if you like, in our markets today.
Right.
The sentiments are still strong, despite what is happening, globally.
Yeah, definitely. We keep referring to the animal spirits there in, most of these markets, but we're not seeing that, in those global indexes. So year to date, 29.1%, still strong, performance. Month to date, 4.2%. So, looking, if you zoom out at the end of the day, we're still seeing, strong performance there. But let's flip over to some recent data out from the MBS. They're showing capital importation, the key highlights there. Top contributors right there. Portfolio investment, $5.49 billion, 85.14% up. Other investments, $599.65 million, 9.31%. Foreign direct investment, that's just about 5.55% higher at $357.80 million. Sectoral contribution, still the banking sector, getting all of that, most of the fund there, the chunk there, 59.75%. Sources of capital importation, the UK, about 57.94%, $3.73 billion. The US coming in second. South Africa comes in third, according to the data from the MBS. That's recent data there. So, Prof, see Nigeria's capital importation there rebounding to pre-COVID levels. How significant is this for, overall economic confidence, in your opinion?
I think it's quite significant. It's quite significant, relatively speaking. By that I mean, if you compare the numbers with what we had in, say, 2024, in quarter 4 of 2024, I think the capital importation number was $5 billion. Today, in quarter 4 of 2025, according to the National Bureau of Statistics, we have $6.4 billion. So that's an improvement. Again, if you take it back to 2023 in particular, you would find that at that time, the entire capital imported into the country, when I say total capital, I mean both foreign portfolio investments, foreign direct investments, other investments, in the last quarter of 2023 was just $1 billion. So when we are now talking about $6.4 billion, for me, that's a leap, a significant improvement. But again, it must be mentioned that we still have a long way to go, particularly when you compare Nigeria with peer countries, more or less. Now, if you look at the United Nations Conference on Trade and Development, the UNCTAD reports data on capital importation, you find that a country like Indonesia, for example, because when I say peer country, I'm referring to a country with this similar population. We are over 200. Indonesia is also over 200. We have oil, we have natural resources, ditto for Indonesia. Indonesia brings in, reports as much as 20, 25, $30 billion in FDIs alone, foreign direct investments. I'm not talking about total investments. The figure you gave, 6.4, refers to total capital, imported into this country, out of which foreign portfolio investments, as you rightly mentioned, accounted for over 85%. So the real permanent capital, which is foreign direct investments, in quarter 4 of 2025, according to the MBS report, was just about 5%. And if you take it for the full year, if you look at what has happened in 2025, for the full year, we had about $23 billion, that came in by way of capital importation for the full year. I don't mean just the quarter. And out of that full year, less than $1 billion, about $900 million came in by way of foreign direct investments. So my point is this, that this pales in insignificance when you compare that with what the figures that Indonesia reports, for example, in terms of FDI, the figures that India reports in terms of FDI. So in my view, and you just also mentioned, the major sources of this, they originate mainly from the UK and the US.
Exactly.
Okay,
all right, Prof.
They are more of temporary capital, the fluctuating one, the foreign portfolio investment, which in my view is something we should try to, address. We should, try to bring more of foreign direct investments.
All right, Prof. We'll take a quick break. Definitely, I know you have a lot to unpack, there with this latest data. I know you'll give us, what it's really translating, into and how we can actually improve it. But we'll continue the conversation right after this break. Do stay with us. It's Capital Market. Welcome back to watching Capital Market live on Channels Television, and we're packing the latest capital importation data from the MBS. We've reviewed the trading week so far. We see our Professor Uwaleke here helping us make sense of this data. Prof, I know you have a lot to unpack there, but looking at $6.4 billion in Q4 and over $23 billion for 2025, you did say this amount is really low, compared to, peers at this time. But is it signaling somehow that Nigeria is back on the radar for global investors?
Yes, I think it is. Remember, I started by saying it's a significant improvement. Looking at where we are coming from, is indeed a significant leap. And all of this is happening on the back of the relative macroeconomic stability that we are currently having now, largely enabled by central bank CBN's policies, the stability in exchange rate, the transparency in the forex market, the moderation in inflation. So all of that, helping to boost investor confidence, foreign investor confidence into the Nigerian economy. So it's quite significant. But the point I was making is that the going forward, we should be more concerned with, what happens to foreign direct investments. We should be more concerned with wooing countries that are known to be big, active in foreign direct investments outside of UK and USA. You can see over the years, the USA and UK have brought in foreign portfolio investments. So each time you see capital importation reports, foreign portfolio investments dominate. And I'm saying that is more like fluctuating capital. It's speculative. and it can also be destabilizing, to an economy in a way, particularly when they leave. Fair weather friends leave at the slightest sign of trouble. But when you have permanent capital, foreign direct investments, they tend to stay, and that is the one that creates jobs. The Indonesia, for example, the highest source of foreign direct investments comes from Singapore. So when I talk about countries that are big in foreign direct investments, I'm referring to Singapore, China, Japan, Netherlands, even in Africa, Mauritius. Okay, some time ago, I did an article on it. I said changing the narrative in Nigeria's foreign, investments, capital importation reports. And in that article, I made it clear that it's important that we find ways to, woo these countries, including through ensuring that the embassies we have in those countries, are strong and also get involved in attracting the investors to come to Nigeria. So beyond just getting finance, beyond borrowing from China, beyond borrowing from these countries, to do projects, which of course are also needed to put in place a good environment, business environment, we should get them to come here and set up the plants, as opposed to shipping in finished goods, because that is what foreign direct investment is all about, and that you can imagine the kind of jobs it will help to create.
Okay.
And if you look at what has happened too recently, the sectors that attract these investments are mainly the financial services sector. The banking sector, for example, accounted for over 50%.
Yeah. So, Prof, it's hot money.
So
it's hot money.
Exactly, hot money. Hot money.
At the end of the day, but Prof,
yes.
I'd like to ask you this. Yeah. Definitely. We've talked a lot about, the presidency trying to woo, investors, seen the moves made, so back to that data on multidimensional poverty, 133 million, that previous data might be more now, at this point. And you still have power issues, at this point. We've seen the power generation getting to about 2,000 level, losing the 4K level that we're even, managing at some point, and now they're promising maybe 6,000, megawatts, generation. But do you think there's a risk that with so many people facing multidimensional poverty, no power, there's a risk FDI won't even want to come in?
Yes, there's a risk to an extent, and it's also an opportunity. Okay, the challenge we have in the infrastructural space today, the fact that the infrastructure stock to GDP for Nigeria is around 30%, compared to South Africa, say 85%. It's among the lowest in Africa. For me, it also presents an opportunity. So we expect to also see these countries coming to invest in power plants, okay, to invest in critical infrastructure, to invest in transport infrastructure, to invest in things that will help to really grow this economy. So I am saying that those challenges are, in my view, represent opportunities, and that's also part of why you find the sometimes the central bank appears hamstrung. There's no doubt that when it comes to macroeconomic stability, in this country today, I just mentioned it, the central bank would appear to be the champion. That's done a lot to ensure that. But again, when it comes to inflation, ensuring that inflation is tamed, such that the common man can feel it, the fiscal side has a lot to do, because inflation drivers in this country, they are not, completely monetary. You have the supply side, you have the structural side, to inflation challenge, which these sides are, in my view, exogenous to the central bank. There's little the central bank can do. For example, with respect to insecurity, it is the government that should fix insecurity. It's the government that should fix, power. Okay, so when these things happen, it becomes very easy, for the central bank to really tame inflation and bring it down to single digits. Because it's only when we talk about single digit inflation, okay, that we can now have the type of inflation that will support, an inclusive growth. Because today we have growth rates that don't appear to be inclusive. We hear GDP is growing. Last year, for example, GDP grew by 3.87%, but you still find people that say that think, and I am one of them, that GDP is still weak. We need something stronger. But beyond even the number, we need a GDP figure that is broad-based, that's inclusive, to the point where the common man can feel it. So my submission here is that, yes, we have those challenges, but they represent, opportunities. We really need to do a lot in terms of, bringing in foreign direct investments as opposed to foreign portfolio investments. It's not as if foreign portfolio investments are not needed. They are actually needed. As a matter of fact, the foreign portfolio investments that we have had, have helped a lot to also bring about the stability in terms of accretion to reserves. Today, here, net external reserves is over $34.8 billion, net external reserves, gross over $50 billion. The liquidity we have today in the foreign exchange market. So foreign portfolio investments, no doubt, have helped, but they shouldn't be seen to be, the real issue, because just as we have rightly said, they can, prove to be very fleeting, and that's what I described as hot money in the first instance.
All right. So at this point, we don't want, fair weather investment. We want the big, cold FDI, at this point. Thank you so much, Prof. We do hope at some point we can flip that over or get a balance there with FPI and FDI at this point. Thank you so much for joining us this weekend, helping us unpack the market and unpack this new data. Professor Uwaleke, Director, Institute of Capital Market Studies, Nasarawa State University, and President, Capital Market Academics of Nigeria. Thank you so much, sir, for coming on today.
My pleasure. Thank you so much, Ladi.
And that's a wrap. Definitely, I hope you have direction going into the new trading quarter and the new trading month next week. Thank you for watching Capital Market. Keep it here on our business show so you get a direction into some of these volatile markets. Thanks for watching. I'm Ladi Williams. Bye for now.